Hi, I'm Terry Swanson, broker at Century 21 Results Realty Services, and we want to do a real quick video to tell you about 3 different rates that are going on and clear up a lot of confusion and misunderstandings with the Federal Reserve Bank and when they ultimately raise the Fed funds rate. So we're going to talk about one, the Fed funds rate, we're going to talk about prime, and we're going to talk about mortgages. What effect does each have on each other? Now, I'm not an economist, so I'm going to bring this to you in real layman's term and might be not as brilliant sounding as others, but let's see how this goes. So this chart goes back to 1990, gives us 25 years of tracking. The blue area right here shows you the Fed funds rate. Now, interesting thing is back here, 2008, 2009, you'll see it went down to nearly zero. The Fed funds rate is what banks charge in an overnight exchange to each other to lend money to each other. Prime is typically, on average, 3 points higher than the Fed funds rate. And prime is what typically is associated with automobile loans, credit card debt, and consumer-based loans or business loans that banks give to businesses. So their short-term debt is what they're considered. Now, we know one thing, the Federal Reserve is going to raise the Fed funds rate, whether it's the next meeting or 6 months down the road. Now, you'll see here, the green area is mortgage rates. It is not directly affected by the Fed funds rate, but what I'm going to tell you is, every time that the rate goes up or down, mortgages tend to follow right in line with it. So pay attention to this, because if you're looking to buy or sell in the next 6 months to a year, this is going to have an impact on mortgages, and everybody knows the Federal Reserve Bank is going to raise the Fed funds rate. So your prime rate is going to go up for your consumer loans. Mortgages, I cannot tell you with certainty, 100% certainty, that they're definitely going to go up, but when you look at all of the things that come together that affect mortgages, once they do that, stock market's going to react one way, the bond market's going to react one way, and those are the things that are going to cause a reaction in mortgage rates. And everybody's predicting once mortgages start to go up, they're going to steadily rise, not like overnight, but steadily rise, and that is going to have an effect on your purchases for homes right after that happens. So pay attention to this. I just want you to be educated. Understand Fed funds rate, when they raise that, prime will definitely go up. Mortgages will most likely go up, not because that went up, but because of the other factors that come into play. If you know a Century 21 agent with Results Realty Services, reach out to them and get an understanding. We got printed up stuff on this so you can understand as a consumer, be aware of it, be on top of it. That's what this is about. Thank you very much. Hope this helps.